Hi everyone, Cari Carter, CC Group Edina Realty 50th and France office, and we're here today, Wednesday afternoon, to do Fun with Math with Chad Johnson. Chad Johnson is my preferred lender. He is the lending dude, and he's going to talk to us again about bridge loans. Fun subject, but one that we are asked about every single day. We skimmed over it last week, so we're going to talk a little bit more in detail and use an example we're working with right now. We're working with clients that have been in their home for 32 years, and they fell in love with the property that they want to do a renovation to, about $350,000. Again, they haven't bought a home in 32 years, and they're trying to figure out, how does this work? How does the math work? So Chad, tell me what you recommend to them. How does it work?
Sure. So the easiest way to describe a bridge loan is it's a line of credit where you can access the equity in your current home without having to sell it first. So we set up the loan ahead of time. You buy your new property. We pull that equity out of your house. Again, like a line of credit, that's your down payment for your new property. You can either move in right away. You can use that money for renovations. You have your current mortgage payment, your bridge loan payment, and your new mortgage payment.
Right.
So,
and you know, technically it's possible. I call it the pendulum swing. It's possible we won't need to tap into it. The reason we ask our clients to explore that as an option is so they're not at risk of losing the home that they love in a situation where they'd be contingent on the sale of their current home. Sometimes what we're doing is we're putting the bridge out there as a safety net. And then what happens is we list your home, it sells, and we're able to coordinate the closings at the same time so you can extract your money. The third scenario is people don't want to move out of their house right away because the house they find they want to do renovations to, and they don't want to live in the house while they're doing that. I would say in that case, the worst case scenario is maybe you're in a 3-month gap where you're living with your current mortgage payment. We're extracting the money out of it for the bridge to purchase the new property, and then you're closing on your current home 2 to 3 months later. In that scenario, let's say we're looking at a $500,000 sale. The holding costs on something like that, if you put that into a real number, would be what?
$5,000?
Yeah.
$6,000?
People don't realize, they think it's this big giant number. It really isn't. So the takeaway here is, regardless of your situation, regardless of the circumstances you're dealing with, there is a really easy solution, and Chad can run those numbers for you and give you, I call it the rip the Band-Aid method. People are so afraid to just have the money talk, and he makes it fun. That's why we call it Fun with Math with Chad. So give us a call. If you're considering buying or selling, don't be afraid of the math. We're happy to help you with that. Check out CC Group MN on Facebook. Like us, follow us. We'll be doing these interviews every week with Chad. Thank you so much.
Thanks.
You have a beautiful day, everyone. Thank you.